Hello everyone, welcome back to my channel. The recent developments with Iraq's central bank, or CBI, and its partnerships with international financial institutions are worth examining if you're following the potential revaluation of the Iraqi dinar. Here, I'll break down why these steps matter and what they could mean for Iraq's currency on the global stage. International banking partnerships and dollar liquidity? The CBI has introduced a second channel to pre-fund dollar accounts for domestic commercial banks. This essentially means Iraq is ensuring that its banks have a steady supply of US dollars. By guaranteeing liquidity, these banks can better support trade and other international transactions. A stable dollar supply could help Iraq stabilize the dinar's value by reducing dependency on unofficial currency markets for USD needs, which often leads to exchange rate fluctuations. With a controlled and accessible supply, the CBI can maintain more stable exchange rates, a fundamental building block for a future revaluation. Correspondent banking relationships, CBRs, and major financial players. Iraq's engagement in correspondent banking relationships, CBRs, is a move toward normalization with global finance. CBRs are crucial for conducting cross-border transactions as they allow Iraqi banks to facilitate payments and financial services worldwide. The CBI's connections to banks like Citibank, despite any formal denials, point to Iraq establishing credibility within the international banking system. These connections are essential for building trust in the dinar and could help Iraq position the dinar for international trading, which could lead to an increased valuation over time. A successful integration with CBRs is key to supporting large-scale investment, trade, and foreign interest in Iraq. A stable environment makes the dinar more appealing to investors, possibly pushing demand and value upward. IMF's role in the Article 4 consultation? The International Monetary Fund, IMF, regularly consults on member countries' economies. And in Iraq's case, the Article 4 report emphasizes structural reforms aimed at stabilizing Iraq's financial system and currency. This guidance suggests Iraq is actively being prepared to engage in a more open and potentially revalued currency system. The 68-page IMF report provides a framework for improving Iraq's economic fundamentals and regulatory practices, strengthening the CBI's role and making the country's banking system more robust and transparent. Achieving these goals could make the dinar more attractive as a stable currency on the global market. Improved cross-border payment systems and trade facilitation? By integrating more seamless cross-border payment systems, Iraq could improve trade volumes and economic growth. Increased trade leads to a stronger economy, allowing for a healthier currency valuation. If Iraq can handle international trade transactions more reliably, it could pave the way for a gradual increase in the dinar's value, particularly as the country's economy stabilizes and becomes more diversified beyond oil. What this means for the dinar's potential revaluation? Gradual value building. These steps suggest that Iraq is laying the groundwork for a sustainable increase in the dinar's value. This isn't about a rapid revaluation, but rather a steady progression as Iraq's economy and financial systems improve. Market confidence, a structured approach with international partnerships, especially with institutions like the IMF and major banks, helps build confidence in the dinar. Increased investor confidence and greater financial stability within Iraq could ultimately lead to a higher exchange rate for the dinar. Risk reduction. The CBI's actions to ensure dollar liquidity and strengthen Iraq's banking infrastructure help reduce the risks associated with the currency. When risk is minimized, a currency becomes more valuable to investors and international partners. Why full revaluation may take time? Although the steps Iraq is taking are promising, achieving full revaluation of the dinar to levels anticipated by some investors is a complex process. It requires sustained economic growth, reduced political instability, and consistent banking reforms. A gradual increase, supported by Iraq's continued stability and partnerships, is more likely in the short to medium term. A rapid revaluation would require immediate economic shifts that may be difficult to sustain. So Iraq's approach seems to focus on building value through fundamental, long-term reforms. In summary, while these recent actions by the CBI and its international banking relationships don't mean an immediate, dramatic revaluation, they set the stage for steady growth. This news indicates that Iraq is serious about aligning its financial infrastructure with global standards, and if successful, these changes could lead to a healthier, more valuable dinar in the future.